All right, if you've glanced at your portfolio lately, you've probably seen it, a sea of red. Crypto has taken an absolute nosedive, and pretty much everyone's asking the same thing. Why? Well, in this explainer, we're going to break down the key factors behind this crash. We're going to dig into our source material to really separate the facts from the fear. So let's dive right in.
Okay, just to put a number on it, Bitcoin is down a staggering 22% from its recent all-time high. I mean, wow, that's not just a little dip, you know? That's a full-on plunge. It's rolled prices all the way back to levels we haven't seen since last June. Yeah, it's a serious drop, and it's got a lot of people feeling pretty nervous.
So, the big question is, what's really going on? This whole thing happened so fast, so sharp, and now everyone's scrambling for answers. Is this it? Is the bull run over? Or is there something a bit more complicated happening behind the scenes? Don't worry, we're going to get to the bottom of it.
Okay, first things first, we need to really wrap our heads around the scale of this thing. The mood in the market, it's gone from optimistic to, well, extreme fear. And to really understand why, we got to look at a little bit of context.
And look, this is not just some minor correction. We're talking about a serious retracement here. It's completely wiped out months and months of gains, dragging the price all the way back to where it was in the early summer.
And here's the kicker. November is usually a great month for Bitcoin, historically speaking. So this sharp reversal, this nosedive, it's actually on track to make this one of the worst Novembers on record. And you can bet that's a huge reason for all the panic we're seeing.
All right, so before we jump into what's really driving this thing, we've got to cut through all the noise. There are a ton of easy explanations, these convenient stories floating around, but our source material is pretty clear. They're not the real story.
You've probably heard these before, right? They're the usual suspects. Oh, a big whale must be moving their coins. Or Russia or China are selling. Maybe the ETF inflows are slowing down. You know, the classic go-to excuses anytime the market takes a tumble.
But here's the thing, and this is a key takeaway from our source, none of those are the real reason. Nope. According to the analysis, that's all just surface-level noise, and it's distracting from a picture that is way, way more complex.
And it's not even the old-school critiques, you know, the kind of thing you hear from economists like Paul Krugman. That whole debate about whether crypto has any legitimate use is always kind of buzzing in the background. But our source is clear. That's not what triggered this specific crash.
So if it's not any of the usual suspects, then what in the world is it? Well, this is where it gets interesting. Our source material points to what you could call a perfect storm, a combination of 6 key factors. We're talking a mix of big-picture economic stuff and some very crypto-specific events. This right here, this is the core of it.
Okay, let's unpack this, because this is the real meat of the story. First up, U.S. inflation data came in hotter than anyone expected. That always spooks investors. That directly led to number 2, the chances of the Fed cutting interest rates just poof, disappeared. And when it costs more to borrow money, risky assets like crypto are usually the first to get hit. Third, you've got whispers that the AI stock bubble is about to burst, so people are pulling their money out and running for safety. Fourth, and this one's a big one inside crypto, we saw huge liquidations of leveraged trades. Basically, people who borrowed money to bet on prices going up were forced to sell, creating this massive downward spiral. On top of that, number 5, cracks started showing in traditional markets, which just added to the fear. And then, to cap it all off, 2 subprime hedge funds just blew up. It was like one domino after another.
So you can see how all 6 of those things together created this super fragile environment, right? The stage was totally set. All it needed was a little push. A big dose of fear, maybe a bit of market manipulation from some of the newer Wall Street players, and the whole thing just tipped over the edge.
Okay, now let's switch gears for a second. We've been talking about why this crash happened, but our source material brings up a really provocative idea. What if these insane price swings, what if they aren't a bug? What if they're actually a feature?
And this quote from Michael Saylor just hits the nail on the head. Think about it. Crypto markets are on 24/7 all around the globe. There are no circuit breakers, no closing bells. You can't just pause it for the weekend, so it reacts to news and sentiment instantly. And for people who are big believers in crypto, that constant access, that's its biggest strength, not some kind of flaw.
And that leads to a really interesting way of looking at things. If you buy into this idea that volatility is a feature, then a moment of extreme fear like right now isn't a signal to panic sell. It's a signal of opportunity. In fact, our source points out that a lot of people who felt like they missed the boat on the lows last June were basically praying for another chance to get in. And, well, this might just be it.
And look, this isn't just some nice-sounding theory. If you look at the history, the data shows a really clear pattern. Again and again and again, Bitcoin has had these absolutely brutal crashes. We're talking drops of 80, even 90%. But every single time, it has eventually recovered and gone on to new all-time highs. This whole cycle of crashing and then recovering is at the very heart of the long-term argument for it. Okay, so let's zoom out from all the day-to-day chaos, because despite all this short-term panic, the bigger story, the story of actual crypto adoption, seems to be speeding up, not slowing down. Let's just look at some of the evidence.
So this is kind of the other side of the story, right? The counter-narrative to all the fear. You've got huge investors like Michael Saylor making these bold predictions. You have actual countries like the Czech Republic and Luxembourg starting to treat Bitcoin like a real reserve asset. And then you have former execs from BlackRock, the biggest asset manager on the planet, calling Ethereum the future infrastructure for all of Wall Street. This adoption isn't just one thing, it's happening everywhere, at all these different levels.
And I think this quote from billionaire Grant Cardone really drives the point home. $1 billion of Bitcoin or $1 billion of real estate? He says he'll take the Bitcoin. But why? Because it's fast. It's almost frictionless. You get to skip all the traditional headaches, the titles, the lawyers, the banks, all that red tape. That's the core argument for efficiency that believers think is ultimately going to win.
So really, here's the bottom line. The price is going crazy, yes, but the fundamental reasons people are interested in this technology in the first place, as a potential new financial system, a digital store of value, a whole new decentralized internet, none of that has changed. For its supporters, the core fundamentals are as strong as ever. And that really leaves us with the final big question. Is this moment of insane fear a sign that the party's over? Or is it just another wild and crazy chapter in the much, much longer story of crypto? The source material we've looked at definitely makes a strong case for the second one, hinting that the real story might just be getting started. Thanks for tuning in.